First, the fighting has to stop before there can be a complete assessment of how bad Libya's oil infrastructure has been damaged.
There are pictures of damage being inflicted on those cities and those terminals. We don't know what the extent of that damage is and how quickly they can be repaired. We don't know what damage has been inflicted on the oil fields themselves or on the pipelines.
At one time, Libya was responsible for 2% of world oil production and was a key exporter to Europe through links with Italian oil giant Eni. 85% of Libyan exports once flowed to Europe.
Libya is going to take some time to come back to even 1 million barrels per day, let alone to their previous peaks of 1.6, 1.7. We can see about 200 to 250,000 barrels per day, maybe even 500,000 barrels per day come online by the end of this year.
Oil shares jumped in Europe Monday. Eni shares closed 6% higher on the assumption it would not lose any of its oil contracts. Spain's Repsol said in July it'll take 4 weeks maximum to restart production in Libya. It believed there had been no damage to its facilities. Total says it's monitoring the situation carefully to assess when it could restart operations. Analysts, though, say oil field workers would have been fighting themselves.
There will be great disruption to the human capital of the Libyan oil industry, which will have to be reassembled. People will have to be demobilised, disarmed, and willing to go back to a job in the oil industry.
At least the National Transition Council said early on they would honour the oil service contracts signed before the civil war began. Bottom line, only after hostilities fully cease and employees and experts are allowed back into oil fields to assess damage, could Libya then once again become a player on the international oil markets. Jim Bolden, CNN, London.